FX Nation, what's up, guys? Welcome back to the channel and welcome back to another video. Guys, on today's video, we're actually going to answer some of your questions. So I get questions all the time in the comments of the videos, which I really appreciate. And I'm going to take the time during this video to actually answer some of those questions. And the reason I'm doing this, guys, is because we just hit over 1,000 subscribers, guys. Thank you so much for the support. I really appreciate it. So for this 1K edition, guys, I'm going to answer your questions that you guys have asked me in the comments, all right? So without further ado, guys, let's go get this video started. All right, guys, so the first question comes. It said, can you check on EURUSD March 11th? After 2 hours of London Open, it made a W with 9 candles between. 15-minute candles should have been a great setup for your strategy, but it did not go up. So do you see any indicators that would have that you would not have taken the trade? All right, so let's see what he's talking about here, guys. So this right here is March 11th, and I'm going to assume that he is talking about potentially a W here, like this. Okay, so why did this not go up? All right, so to answer your question, okay, the first thing is, what kind of a pattern is it? Okay, because we only trade 3 types of patterns. You guys know this, right? And if you don't know this, all right, let me just give literally a quick recap. All right, so we trade a type 1, type 2, type 3 setup. All right, so type 1 setup is pretty much when price is moving inside of the Asian box, and then the price either breaks out to the high or it breaks out to the low and then creates a W or an M, right? That's a type 1 setup. All right, now a type 2 setup basically goes out and price is basically ranging during the Asian session, and then it creates the M or W at the top or at the bottom of the Asian range, like that. Okay, that's type 2. And then of course the type 3, the only difference in the type 3 is going to be basically that price sets up the Asian range in the middle. All right, so it can basically happen in the middle of the range, not at the top, not at the bottom, but in the middle. All right, so those are the only those are the only setups that we look for, right? Type 1, type 2, type 3. All right, if it's not that setup, we don't trade it. Okay, so to answer your question, if this is a W that you're talking about, if you're talking about having a W like this is at the top of the range, right? This is not an actual setup that we look for to trade. Okay, so this would not have been tradable anyways. What is actually tradable here is going to be, this is not a W that you're looking for. You'd be looking for a M formation here as a type 1 setup because you're above the actual Asian range, right? So anything above that happens above the range is going to be a type 1 setup. Okay, so the setup that you should have been looking for instead of a W is actually an M. Okay, so that answers that question, is because we would not have taken this trade as a W. It would have been actually taken as an M because of the fact that price is above the Asian range. Okay, and so that particular trade setup here, you know, you're only looking at getting 22 pips out of it. So really the actual logistics of it, of being an actual setup to trade, is something completely different, because you're looking at, you know, really not even a good trade setup. To get to at least 30 pips, you're risking almost 17, which is not too crazy, but the risk to reward ratio isn't there with, you know, you typically want to do 2 to 1, not 1.5 to 1. So not a really good setup, to be honest with you. for this particular one. And so here's a clue as to why I don't think that this would have been a good setup anyways from the get-go, and it's because of one of the rules that I always tell you guys is never ever counter trend trade on level 1. Okay, so if you actually look to the left, you're coming off a peak formation low here, right? So you're coming off a very low here for the week. All right, and yeah, so this would have been like level 1 here as far as consolidation level, right? So we are not looking to counter trend trade on this level here. We're actually looking for a buy setup. Okay, the buy setup actually didn't come until the New York session, late into the New York session. Okay, it's because it just kept going up. Right, so hopefully that answers your question about this specific trade. So let's go to the next question here. Next question is from James. Thanks, mate. How do you go about choosing the currency to trade for the day? Do you have currencies that you trade regularly? That's a great question, James. Let me answer that for you. So the answer is, how do you pick the best currency trade to trade, right? So I typically only like to trade the euro and the pound pairs, and that's really because I'm primarily trading the London session. Okay, so if you're trading London session, obviously you want to get pairs that actually are moving or that have action during that actual trading session. Okay, so that's the euro and the pound pairs. So those are the pairs that I generally concentrate on whenever I'm looking for a trade setup. Okay, and really when you're looking for trade setups, all right, you want to go ahead and you just want to start from the very beginning. Okay, so let's take a look at some examples from let's say Friday. Okay, and just to give you a quick sample of what I'm talking about here. So if you go through the actual different pairs. All right, so let's go to this one here. EURUSD at about 2 o'clock looked like this. Okay, now I don't like trading anything that has all of the EMAs like this bunched together. Okay, so for me, that's a no-go. So I skip that one. And then go back to, let's say, 2 o'clock here on EuroCAD. EuroCAD has what? The exact same thing, right? EMAs are all bunched together. It's not looking like something that I want to trade. I go to the next one. About 2 o'clock here. Here's Euro Pound at 2 o'clock. Same thing, guys. EMAs are all over the place. They're all throughout the price. Okay, they're not ranging in any specific direction. Okay, so it's not something that I want to trade. Go to the next one. Okay, 2 o'clock. So here's 2 o'clock on Euro JPY. What do we have here? All the EMAs are separated from each other, so it's definitely something that I can use to my advantage. Okay, this would be one that I would definitely be looking at. All right, so I would mark this one here. So I'd mark that one there. So that's 2 so far that are definitely looking like there's something potentially tradable. All right, so we go to the next one. Let's see, Euro. This is Euro AUD, and this is what it's looking like at 2 o'clock, right? So again, same thing. We have the EMAs on our favor, okay? They're separated, right? So it gives us something that we can actually work with, okay? So we mark that one off as well, all right? Potentially. We do the same thing here for Euro NZD. Go back. What do we have? EMA is all separated. Okay, that's another potential trade. So essentially, you just go through this, guys, and you go through all of the different pairs that you trade. Okay, this one here, pound USD, all the EMAs are going straight through the price right now. That's not something that I'm interested in. Okay, if we go back to, let's say here, this is pound Swiss, same thing, guys. You see how price is going straight through price? Not interested. Okay. And guys, this should take you no longer literally than like a couple seconds, okay, to decide this. All right, same thing. Price is going through the price right now, or EMAs are going straight through the price. Not interested. You just keep going, keep going. You can already see that this one is going to be the same thing, right? It's going to be the same thing, so it's no go. This one here is at 2 o'clock. This one here, price is what? You have the 50 already crossed. You still have the 200 and 800, possibly, maybe, right? Go to the next one. Again, here we have 800, 250, all going straight through price. Not interested. Okay, so now we've narrowed down from all of the pound and euro pairs. We've narrowed it to 1, 2, 3, 4, 5 potential trade setups. If I can't decipher within a minute of what level it's on or trend, direction, anything like that, then guys, I literally just skip it. Okay, there's nothing that I can identify within a first minute glance at the pair that can tell me something in what direction it may be going or what I'm looking for or bias or anything like that. Guys, I literally just skip it. I can go on to the next one. Okay, if I happen to go through each of the euro pairs and each of the pound pairs and I find not one trade or not one pair that remotely has any kind of interesting setups or anything like that at all with it, then guys, you know what? I go to sleep. All right, I go turn off my computer and I go to bed. All right, because I'm not willing to risk any kind of money for something that I'm not going to be sure about. Okay, and this took me a very long time to learn, but believe me, it is well worth it. If you go through each of the pairs that you're trading and you don't find anything, guess what, guys? There's nothing wrong with going right back to bed or doing whatever it is that you're going that you were doing before. Okay, because there's no way that you should be risking money unless you know for sure what's going on. Okay, so literally just scanning through the pairs and seeing, okay, which ones potentially have the best setups. So I look at levels. What level is it on? Can I identify the level within a minute or so, and just see what's going on with it? Okay, at a quick glance. If you can't figure it out within a first minute, guys, that means that you're going to be in there for at least 5 to 10 minutes trying to figure out what the pair is doing. And to be honest with you, it's just probably not going to be a very good trade setup anyways. Okay, you want something that's clear, concise, and very straightforward. And if you can't find that, guess what? You're done for the day. You have the day off. So, and if you're wondering, does that ever happen to me? Absolutely. It happens maybe once or twice a week. Okay, so there's nothing wrong with it. All right, there's nothing wrong with it. I'd rather not trade and know that my money is safe and not being at risk of losing a trade than to put in a trade just because I want to be in a trade in the market. Okay, I don't have that fear that when you first have of trading Forex, that fear of loss. Okay, that fear of losing out when you first start trading because you want to be in a trade so bad, that you think you're going to lose out on something if you're not in a trade. I don't have that anymore. Okay, I can care 10 craps about it. All right, it's either the setup is either there or it's not. For me, it's very black and white, and if I don't see anything at all that can that tells me, hey, this this may look like something that I'm interested in trading, then I don't worry about it. All right, I don't worry about it. All right, so next question. As far as targets goes, my targets are pretty simple. Okay, if I take a trade, all right, where the EMAs are in my favor, and what I mean by that is, let's say I'm down here and I'm looking to actually buy, right? Because I believe, let's say this is peak formation low. Okay, if I have the EMAs in my favor, then the EMAs become my take profits. Okay, so if I'm going to be a buyer here, okay, because I believe that this is the peak formation low, right, where everything's going to reverse that, then the EMAs should be in my favor. Okay, number one. And when they are in my favor, I use them as take profits. So for example, my take profits here would be the 200 and the 800. Okay, and so my targets would be set at those specific places. So the 200 and then the 800 would be the second target. Okay, most of the time though, you'll have 50 in the 200, and those will primarily be your main two targets. Okay, if I have a trade setup that I do not have the EMAs in my favor, so a good example of that would be here. Okay, if I'm trading this here, all right, and I'm trading this down, all right, obviously I don't have the EMAs in my favor. So what do? First target is 30 pips, second target is 50 pips. That's it. It's pretty simple. I don't use support, resistance, or any of that stuff. I don't use any of that stuff in my trading. I don't care about it. I don't care about support and resistance. Okay. So my targets are pretty simple. I use the EMAs if they're in my favor. If they're not in my favor, 30 pips first take profit, and 50 pips is the second take profit. That's it. There's nothing that I need to complicate or anything like that with this. Okay, so I try to keep it as simple as possible because I do not need to have any more anything complicated within my trading itself. My trading is pretty simple. Okay, it's very black and white, and it's very straightforward. So no, I don't use support and resistance or anything like that in any of my trading. All right. So I hope that answers that question, Electric. Next question comes in from Kenneth Johnson. He's asking, what would be the best times to be up at the computer or phone to look for these trades? It's a great question. So for me, the best time to be up, since I trade London, I like to be up by 3 o'clock and start looking at charts by 3:30. Okay. The reason I do that and I don't get up any earlier is because I want to make sure that I let the early moves happen, so I can concentrate on the actual real moves that are going to happen. Okay. One of the biggest mistakes that I made early on when I was trading this is that I would always get into the trade way too early because I would always trade it off of the edge of Asia. Okay. And I kept getting burned on that really bad because I always kept taking the trades way too early. So in order to avoid me doing that, I basically just got up at 3:30, 4 o'clock. That way I could let the pairs actually move and do what they're going to do before that essentially wouldn't allow me to get in the trade early, right? It would let me have more patience in the trade, and essentially I would be able to get into the actual subs that I wanted to get into because I was more patient since I was waking up a little bit later. All right. So if you're trading London session, I would tell you same thing, 3:30, 4 o'clock. If you're trading the US session, probably 8 o'clock is where I'd be starting to look at charts for the US session. All right. All right, next question is from Damien, and he asked, how is it possible to trade market maker setups, M's and W's, when everybody knows? I imagine that the market makers would change their models. Damien, not everybody knows. Let me tell you that much. So yeah, not everybody knows. Okay, first off. So if you look, most of traders now are, trading support, resistance, what is it, Fibonacci's and harmonics and all that stuff. So yeah, not a lot of people know, and the market makers do know. Okay, but they don't do M's and W's like clear as day, right? They don't do them like that all the time. Okay, if you ask anybody to identify, the market maker cycle on a chart, it's not as easy as it looks. Okay, it's definitely difficult because they definitely change consistently on a regular basis. It's never the same thing, but essentially, it is the same thing. They just do it in different ways. Okay, but yes, you can trade it. I show it to you. I can show you setups literally almost every single day on every single pair. Okay, almost every day on every single pair there's a trade setup. Okay, and if you want to, you can literally go to my playlist of market maker setups, and I have videos there of countless setups that are there all the time, every day. Okay, so every pair may not be tradable every day, but I guarantee you it's tradable at least 4 times out of the week. So they're definitely there. Okay. Jensita asks, can I do a video to clarify the vector and shift candles and how they assist to be on the right side of the trade? Jensita, to be honest with you, vector candles, all they are is just pushes that market makers make, right? So a good example of that is if we go to a chart here, you'll see that before, let me just draw out the little Asian box here. You'll see that before they make their actual move that they want to make, okay, they'll make a push. And sometimes it could be in 3 big strong candles. Other times it could be in 1. All right. Those specific candles are what they call vector candles. Okay. And so, for example, here's one of them here. Asian session makes a move down. As you can see, it's creating a W here. So this is the vector candle here. Okay. A shift candle is basically, shift candles are going to be on the other side, second leg M or W's. That's basically the candles that move away from price. So have you ever seen essentially a stop hunt high, and then as soon as they have the amount of traders that they need stuck, then they do a shift candle? Okay, good example of that would be this here. So here they're basically having traders go short, trying to convince them to go short. As soon as they have enough, here you have a shift candle here. One candle basically took away 45 minutes of trading. Okay, so this right here is a shift candle, and that is all that a shift candle is. Okay, is a candle basically that is used to shift the market away from traders that they want to trap. Okay, so vector candles are basically the candles that go stop hunting. Okay, shift candles are the shift candles that are the candles basically that come away from the actual stop hunting. Okay, so candles like this. All right, so here's your vector candles here, 1, 2, 3, and then the shift candle is right here, right after it. Okay, so that's all that vector candles are, and that's all that shift candles are. Keep it real simple. Keep it 100. So we have another question here from Brett, or from Bet, excuse me. His question is, which is the best time frame to map out the market cycle? So the market cycle is viewable on every time frame. Okay, the bigger the time frame, the bigger macro view you have of it. Okay, so if you're looking at a candle if you're looking at a chart on a daily chart, and when you see the market cycle on a daily chart, obviously within that first W at the bottom, there's multiple smaller cycles within it. Okay, so the market cycle you can see on every single time frame. Okay, as far as best time frame, there's really not a best time frame. It's just whatever time frame you choose to trade on. Okay, for me, I trade on the 15-minute chart for my entries. So you can go to the 1 hour time frame to see a little bit of a bigger picture with the market cycle. Okay, unless you're swing trading, then you're looking at the 4 hour or daily daily charts, 4 hour charts. But for me personally, 1 hour, 15 minutes. Mostly I just stick to the 15-minute charts just because it's easier. I like to keep my trading very simple, and I don't like to complicate it. So yeah, 15-minute chart, 1 hour, that's it. Pretty simple. Another question from Electric, and he wants to know what the moving averages are that are being used on the charts. So moving averages 5, 13, 50, 200, and 800 are the moving averages that you see on my chart. So last question Sam asked is, he says it may be a stupid question, but how do you set your bias to buy or sell? So my bias is pretty simple. Okay, so the majority of my bias when I look at trading is basically the EMAs, are primarily what I use for bias. Within 5 seconds of looking at a chart, I can tell whether I'm going to be potentially looking more for a buy or a sell. Okay, so how do I do that? If I'm looking at a trending market, so let's say the EMAs are the 800, 250 or above price, then obviously the market on the higher time frames are in a downtrend. Okay, so I'm basically looking for a potential sell setup. The only way that I do not look for a sell setup in those situations is if I know that I'm at a peak formation low and I'm actually looking for the reversal. Okay, that's the only one that I would trade against the trend. All right. Same thing. If I go up to a chart and I see that the EMAs are basically the 800, 250 are all below price like this, then I'm essentially looking for a buy, right, to go with the trend. Again, same caveat. If I see, however, that I am at a peak, I could be at a peak formation high, then I'm definitely looking for a sell, not a buy, because I know the market's going to reverse, and it's going to start the cycle again. So the only reason that I would not go with the trend is if you're at peak formation low or high. Other than that, just use the EMAs. Keep it really simple. Use the EMAs to let you know what your trend directional bias is going to be. Okay, this is of course just talking about in a trending market. If the EMAs are going straight across and straight through price, then you're probably not going to want to trade until they move away from price and let you know if the directional trend is going to continue or if it's not going to continue. All right, guys, keep it very simple, very simplistic. Do not make this harder than it should be. All right, guys, I hope that this answered some of your questions that you've asked me. I try to reply back to as many questions as possible. So, guys, thank you again so much for taking the time to watch the video. Thank you for the 1K in subscribers. Please keep sharing the content. Please liking it, as we'd like to help out as many traders as possible. All right, guys, until next time, thank you so much and have a blessed weekend. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.